Investment decisions are complicated. Investing in the right place at the right time requires good mentorship. And who better than Warren Buffett as a mentor? Today, we're diving into a topic on everyone's mind: how to secure your financial future with passive income and protect yourself against the relentless force of inflation. So let's get started. The challenge of holding cash. Retirement planning is no joke, and if you're feeling a bit uneasy about your retirement fund, you're not alone. According to a recent Gallup poll, 71% of non-retired adults are at least moderately worried about being able to fund their retirement. And that's not all. A Go Banking Rates survey found that nearly half of respondents shared the same concerns. So let's talk about how to turn those concerns into action. But before we dive into the details, let's remind ourselves of a timeless quote from the Oracle of Omaha himself, Warren Buffett. The best investment you can make is in yourself. And that's what we're all about, finding those forever assets that will help you sleep soundly and help your money grow while you enjoy the golden years. Now, many of us consider cash as the ultimate safety net. After all, it's tangible, liquid, and right there when you need it. Suitable? Well, let's challenge that notion for a moment. The reality is cash has its limitations, and history is proof. The value of cash can erode over time, especially when inflation rears its head. Imagine this: you have a pile of cash stored away, but over the years, its purchasing power dwindles because the prices of goods and services keep rising. That's the hidden cost of inflation. It can silently eat away at the value of your money. But don't worry, we're here to help you navigate these challenges. But wait, what if there was a way to protect your hard-earned money from inflation's grip and make it work for you? That's where the concept of forever assets comes into play. These assets aren't just about preserving value. They're about generating passive income and appreciating over time, a dynamic duo that can set you on the path to financial freedom. So, stay tuned as we uncover the top 5 investment assets that outperform cash and shield you against the sneaky erosion of inflation. Asset 1. High-yield savings accounts. Amidst the uncertainty of financial markets, one certainty remains: the potential to earn higher interest through high-yield savings accounts. As Max Lane, CEO of Flourish, aptly puts it, Americans have lost out on at least $291 billion in interest since the start of 2019 by keeping their savings with the biggest U.S. banks. Traditional savings accounts with an average annual percentage yield, APY, of around 0.42% fall short when growing your wealth. Cash might be considered king, but it often fails to retain its value over time, especially in a low interest rate environment where inflation can erode its purchasing power. Once perceived as a haven, cash is becoming an asset class again. Lane says, with many folks feeling the squeeze of their purchasing power declining, everyone should be asking if their money is working for them right now. The good news is that high-yield savings accounts offer a solution. With yields of 4.5% or even more, these accounts present an opportunity to bridge the gap between the returns of traditional savings accounts and more lucrative investment avenues. Not only do these accounts provide better returns, but they're also backed by the Federal Deposit Insurance Corporation, FDIC, protection, and offer daily liquidity. Asset 2. Real estate. Real estate isn't just about houses and buildings. It's a classic investment strategy that has stood the test of time. So why is it considered the holy grail of investments? Let's break it down. First, let's talk about passive income. Imagine earning money while you sleep, and real estate makes that dream a reality. When you invest in properties like rental units or commercial spaces, you set up a system that delivers a steady monthly income stream. The beauty of it? You're not trading your time for money. Your properties work for you. But that's not all. Real estate doesn't just hand you a passive income, it also has the potential to appreciate over time. As the demand for land and properties grows, your investment could become more valuable than when you initially bought it. This dual benefit of income and appreciation makes real estate so enticing for investors. Now, you might be wondering about the inefficiencies of the real estate market. Unlike the stock market, known for its rapid price changes, real estate tends to be slower moving. This means there can be opportunities to find properties at prices that only partially reflect their actual potential value. It's like having your treasure map to hidden gems in the market. But wait, there's more. Real estate has a bundle of advantages that can boost your financial journey. For starters, there are tax benefits. Owning properties can open doors to deductions and credits that can help you keep more of your hard-earned money. Plus, real estate offers something called leverage. This means you can use borrowed money to invest and potentially amplify your returns. It's like having a financial superpower that can help you build wealth more efficiently. So, whether you're considering residential properties, commercial spaces, or even land development, real estate offers a world of possibilities that can align with your financial goals. And remember, as Warren Buffett once said, real estate is a tangible asset, and it's what we would call an inefficient market. This major benefit allows individual investors to exploit the market's inefficiencies. Asset 3. Dividend stocks for steady returns. While promising, the world of real estate investment often comes with significant entry barriers. For many, this can be a roadblock to building a diverse portfolio. That's where dividend-paying stocks come into play. These stocks offer an alternative avenue for generating passive income that's not tied to the volatility of real estate. Think about companies like Procter & Gamble and Johnson & Johnson, household names that have stood the test of time. These companies have a solid history of paying dividends for decades and offer a steady stream of passive income. Warren Buffett recognizes the potential of such assets, stating that forever assets, like dividend-paying stocks, can allow you to make money while you sleep. These stocks have historically provided investors with solid returns, averaging around 10% to 12% annually over the past 30 years. If you're unsure where to start, consider exploring the realm of dividend aristocrats. These stocks have consistently raised their dividends yearly for 25 years or more. They offer stability and growth potential, making them valuable to your investment portfolio. So, as you navigate the path to financial security, remember that real estate isn't the only route to passive income. Dividend-paying stocks present a compelling opportunity to create a stream of earnings that can support you well into the future. But this is just one part of the puzzle. Asset 4. Broad market funds and index funds. Think of broad market and index funds as your gateway to the entire stock market or specific indices, like the renowned S&P 500. These funds mirror market performance, granting access to multiple companies' growth without handpicking individual stocks. Warren Buffett loyally advocates this strategy. He famously stated, "Consistently buy an S&P 500 low-cost index fund. I think it's what makes the most sense practically always." Investing in index funds ensures diversification, mitigating risks through exposure to various companies. This shields investments from market turbulence, while the fund's cost-effectiveness and tax efficiency enhance your potential returns. By combining capital appreciation and distributed dividends from growing firms within the fund, index funds offer a pathway to consistent passive income and financial security. So, suppose you're seeking a tested way to establish a dependable income source and safeguard against inflation. Consider broad market and index funds backed by Buffett and a history of success. In that case, they're a compelling choice for investors at all levels. Explore their alignment with your goals and risk tolerance, and consider their addition to your portfolio. Your financial future could flourish as a result. Asset 5. Annuities. What exactly are annuities? Well, think of them as a way to set up a consistent stream of payments that can last a lifetime. You've got two primary flavors: fixed and variable annuities. With fixed annuities, you get a predetermined amount at regular intervals, providing a stable income source. On the other hand, variable annuities offer the potential for higher returns by linking your payments to the performance of underlying investments. Now, here's where annuities truly shine: combating inflation. You see, as prices rise over time, the value of your dollar shrinks. But with annuities, you're in for a game changer. These financial instruments can help shield you from the erosive effects of inflation, ensuring that your purchasing power doesn't dwindle as the years go by. And here's a neat trick: annuities often team up with Social Security benefits regarding retirement planning. It's like a dynamic duo that ensures you always have enough income during your golden years. By combining your annuity payouts with your Social Security checks, you're building a fortress against financial uncertainty. Just remember, like any investment, annuities come with their pros and cons. They're not one size fits all, and it's crucial to carefully assess your financial situation and goals before diving in. Annuities could be that missing piece in your financial puzzle if you're in the retirement phase or inching closer to it. Warren Buffett's insights on inflation and strategies to beat it. Warren Buffett is no stranger to the dangers of inflation. Growing up with his Republican congressman father, he had the importance of understanding inflation drilled into him. Over the years, he has consistently shared his insights on this topic, giving us valuable lessons to consider. During last year's Berkshire Hathaway annual meeting, Buffett sounded the alarm, saying, "We're seeing very substantial inflation. We're raising prices. People are raising prices for us, and it's being accepted." This concern came against consumer prices surging by 7.9% in February 2022 compared to the previous year, marking the highest inflation level in 40 years. The implications of such inflationary spikes can significantly impact our financial well-being. Inflation isn't just about numbers rising on a chart. It directly impacts your purchasing power. As Buffett has often emphasized, even seemingly attractive investments can lose their shine when inflation eats away at your actual returns. For instance, owning a bond paying 5% interest annually might seem solid, but your real return turns negative if inflation reaches 6%. So, how to beat it according to Buffett? 1. Invest in businesses with low capital needs. Buffett champions businesses that thrive without constant capital influx. These enterprises can outpace inflation by avoiding excessive costs, allowing your investments to flourish even in challenging times. 2. Identify companies with pricing power. Buffett emphasizes evaluating a business's ability to raise prices without losing customers. Companies with this pricing power can offset rising costs during inflation, offering a significant advantage. 3. Consider Treasury inflation-protected securities. Tips. Buffett endorses TIPS as an inflation hedge. These securities pay a fixed interest rate while adjusting the principal for inflation, guarding your investment against eroding value. 4. Invest in yourself and develop skills. Buffett's counsel extends beyond investments to personal growth. Enhancing your skills ensures relevance and capacity to command higher earnings in a changing economy. 5. Avoid traditional bonds. Buffett's skepticism toward traditional bonds during inflation stems from their fixed returns vulnerability to rising costs. Bonds may need to catch up with living expenses, potentially eroding wealth. Conclusion. The quest for reliable investment strategies becomes crucial in a world where financial stability and retirement security are paramount. Passive income and protection against inflation are buzzwords and pillars of a secure financial future. When approached wisely and tailored to your financial goals, the investment options we discussed can be the foundation of your journey toward financial freedom. Check out our other videos like this one right here if you want to watch videos like this. And don't forget to subscribe to our channel. Hit the like button if you found this information valuable, and share your thoughts in the comments below.